Hello, Mark Sturdy here with another snippet from our weekly research from 7 days ahead. And if we look at our summary page, you'll see that we are excited by what's happening in the currencies. We've pulled back somewhat from our bullishness in the stocks, the bonds, and oil. So today we're going to look at the dollar yen in particular. That's the most exciting situation, and the knock-on effects of the dollar euro. So here we have the monthly chart of the dollar yen, and you'll see the yen has weakened through 151.94, completing a triangle here which sends the market up a good deal higher to 170 or so. The significance of this break is that it not only completes this triangle but also breaks above clearly and emphatically for the first time above 147.63. It has been above there once, twice, but this is now a break above both the recent highs and the long-term high, completing a triangle, therefore an overall extremely bullish situation for the dollar against the yen. Looking at the weekly chart, you'll see that the weekly close above there completed the triangle break. Of course, this is a monthly chart, so in fact, we need, for clarity about, in terms of completion of that pattern, we need this to close above 151.94 on the month. But having done so on the week, on a clearly delineated pattern in the week, that is, for my money, a good completion. And in the short term, we can see the short-term rally from the beginning of the year, basically. You'll see how this bull trend has consistently found very good support from prior highs. First of all at 145.98, then at 151.84 when it stood, it held above that level, and now we can look forward with confidence that 151.92 will act in the same fashion. This is a well-constructed bull trend working itself higher. So if there were to be a pullback in the dollar's strength and the yen's weakness, we have reason to suppose there would be good support at 151.92 along the lines of these prior pullbacks and supports. The dollar yen then looks very, very good. There has been an associated strengthening of the dollar against the euro, which in the wider context has great implications. The euro, as we know, has long tried to strengthen above 110. It has failed once, twice, 3 times, 4 times, maybe 5 times. And in so doing, on this fifth failure, that is to say the strengthening of the dollar against the yen, we have completed a pattern which suggests lower, down to 102.50 or so, which in itself would be a break of this 105 level. And that's the level we've identified against the euro, which suggests a final breakdown of this attempt of the euro to go stronger, suggesting very much lower again for the euro. So these, even though we've only got a very short-term completion pattern, unlike the yen, this is a day chart, we have the early suggestion of a completion here, the cascade effect of the completion of this head and shoulders top with the possible completion of a multiple top, perhaps double top and multiple top here through 105 suggests a cascade effect, as I say, between this completion, that move, therefore the completion of this, and then that move. So all in all, the implications elsewhere are there and important. Right now, it's the dollar yen. It looks as if there could be spillover into the dollar euro. Compare that with the dollar sterling, which lacks, certainly it's on support here. There might be the possibilities of a dollar. All in all, the dollar sterling doesn't look so vulnerable. This is in line with our consistent historical feeling that when the dollar gets strength, sterling is a beneficiary. And so we would look at sterling euro for maybe a push up through here, were the dollar to go stronger still against the euro towards 120.53. Thanks very much.